Felix here, and welcome to this pre-market live stream. Today, I want to walk you through what Goldman Sachs is telling their big institutional investors to do. And they actually have three pretty bullish buy reasons. We will also look at what the crazy market's doing right now. We're looking a little bit down this morning, nothing major, but a little bit down. There's some geopolitical warfares that we need to touch upon. And my goal is just to make you the best informed investor out there. And I'll also answer your questions, which is why we do this live, so we can run through your favorite stocks and so on. And I can take your questions and ultimately get you to a place where you know how to make more money from your money. That's my goal for you, to get you guys to financial freedom. I'm in a new spot this morning. If you can spot where I am, put it in the chat, put your best guesses in the chat, and you will win a cookie or something if you get it right. A digital cookie. So let me share my screen with you first. There I am. And you can see the pre-market. Nothing terrible, nothing marvelous either. Amazon, Microsoft, Meta are down about a percentage point. Oracle as well. United Health is still going down -5%. More details emerging on the potential criminal issues going on at UNH here. Mar-a-Lago, no, not quite. Although the sort of chins behind me, you might be forgiven for that guess. Night Angel there, appreciate that. You're very kind. The White House, that would be fun. Capitol Hill, no. Greece, Paris. No, not. Almost nobody's getting this right. Stuttgart, seriously. Why would I go there? I've never been, so I can't judge. But if it's like the rest of Germany, I'm probably happy to avoid it. Now we've offended the Germans in the audience. So here we are. This is the first thing I want you to look at, and then we'll look at Goldman's full report here, which I've got to give you some bullishness as well. Switzerland, no. Okay, a couple of you are getting a bit closer. Not in Italy, not in Hong Kong. No. Enrico, I think you probably have it right there. All right, stop the guessing around the room. You guys can keep doing that. Fear index, right? First thing I look at. So I want to look at the market. I'm like, what's going on there? I could look at all the stocks. I could look at S&P. I could look at the Nasdaq. But ultimately, all I really care about is, are institutional investors protecting their portfolio? And they tend to only do that when things are about to get worse. And right now, not really. We're trading at 19. Below 20 is an okay place to be. It's up a little bit, 4.4%. That isn't actually a big move for the VIX. So yeah, it's up a little bit over the last 2 days, but it's nothing major as yet, and it's moving nice and slow. So not too concerned about it, to be honest with you. Although I'm not loving the Tuesday candle that we had here, where we went down as low as 17.7, and now we're back at 19. So not brilliant either. The second thing you might want to look at, and this is also in Trade Vision, which you can access where? There we go. felixprehn.com/Trade Vision. We got access to the dark pools. What are dark pools? Institutions. So say you're a big client of Morgan Stanley or one of those friendly investment banks out there who really care for the little guy on the street. And you say, look, I've got $1 million in Tesla. I want to sell it, but I don't want to sell it in the market because I don't like dealing with the, the sort of filthy masses. Then you can do it in a private exchange with a private buyer. You can pre-agree a price, no stock market pricing involved there, and you can do the deal. And you can offload the whole thing or buy the whole thing, and nobody's the wiser. And that data gets only reported into these dark pools. Now, we get access to that data because we pay a lot of money for it, and then we give you guys access to that data. So if you wanted to, in, say, Trade Vision, look up, say, Tesla, as I've done here, then you can see, like, how bullish or bearish is the market? And right now we're actually reasonably bullish on Tesla, and that's changed quite a lot over the last week. And then you can also see the most recent trades here, and they come in live. So it's something to keep an eye on if you wish. And then you can see exactly what is going on out there in the market. So that's a good place to start. Too cold to sit outside? Must be the UK. Yeah, you guys are right. You guys are right. So everybody who said UK or London gets a cookie. It's a lovely place. You have to wear socks in the UK. It's true. I am wearing socks, and that is a scandal. It is surely against everybody's human rights. So let's run through what Goldman Sachs is telling their big institutional clients to do. And let me know in the chat if you find it useful to understand what they're telling their institutional clients, the guys with billions of dollars, to do. Would that be useful for you? If that be useful, you put a U in the chat, and I see that this is landing for you. Useful, says George. Brilliant, my friend. You're always the first. George and Scott are the quick ones here. Don't get knifed. Actually, I'm not really planning on going outside, to be honest with you. I shall stay in my my little cocoon here and leave the world out there to itself. Although it's looking reasonably bright out there. I might pop into the park, perhaps. Okay, so lots of use there. Appreciate that. Okay, so the first thing, what they're saying, everyone's looking at, they're saying several clients, and these are institutional clients, right? Big boys, are asking for constant updates on CTAs. What are CTAs? Anybody knows? They're algo funds. So they're the computer-driven funds that are buying stuff on the basis of, rules, which is kind of what we do, except we tend to do a lot better than the algo funds. So basically, the S&P 500, first row here, can you guys see that? If the market's flat this week, the algo funds are going to buy 9 billion. If the market goes up, it's going to buy 9 billion. If the market goes down, it's going to buy 7 billion. Pretty unusual stuff. So they're going to buy even if the market goes down. That's very supportive, right? So that's the first sort of buy indicator, the first supportive indicator from the good folks at Goldman Sachs. Nasdaq, same story. Market's flat, they buy 2 billion. Market goes up, they buy 2 billion. Market goes down, they buy 1.6 billion. Not a lot of difference there, right? So very supportive. If we do go down, we get this money pouring in to the market. Yeah, so that's useful. The second thing is they're talking about taxes, and that's going to be a big story. I put a video out on that yesterday. Like, nobody seemed to want to watch that for some reason. I guess mainstream media hasn't started talking about tax cuts yet, or maybe you don't like the tax cuts and you think it's irresponsible, whatever. It doesn't matter. Like, our politics should not get in the way of us making money for ourselves and our families, because ultimately that's our job, right? Just to make our money work. And the tax cuts are going to significantly impact stock prices. I encourage you to watch the video from yesterday, but I'll give you a quick summary here. We're going to get bigly tax cuts, and that's going to be good for who? Usually the wealthy and usually corporations. Maybe you don't like that. That's okay. But ultimately, last time this happened in 2018, we saw a $1 trillion of buybacks kick off because of that. So we might get a lot of money pouring in to stocks here for the simple reasons that they're extending essentially tax deductions on investments in the US. So if you're a company that invests a lot, you buy a lot of chips, or you build a lot of factories, or you buy a lot of trucks or something like that, then you can write that off, and that's positive for your cash flow. And that means those companies are going to have a little bit more money than they're expecting, which is good. Jeff, you watched it. Brilliant, my friend. Somebody did. Obviously, a couple of 10,000 people watched that, but it wasn't the most popular video out there. And I think sometimes it's good to just make not sometimes. I generally just want to make the content I want to make that I think is the highest value for you guys, rather than whatever would be the latest clickbait thing. Although we do make an effort with really silly headlines and even sillier titles. Now, smash the like, says Colin. I appreciate that, Colin. I saw your very kind comment yesterday, and I'm super happy how insanely well you're doing, Colin. Share it with everybody in here just to inspire some people, Colin, if you would. So what are we going to get? We're going to get a lot of tax cuts, and then we're going to get a lot more spending. So from a kind of long-term point of view for the US debt, this looks like a disaster unless they can pull off some massive economic growth. And maybe they can. Not for me to say. I'm not a US voter, but they are basically... they're basically giving you a lot of money in terms of tax cuts, at least some people, and then they're creating a great big gaping hole in the budget, which is generally speaking what governments do. But perhaps if they get to 5% economic growth in the US, which would be insane, then we're going to have the rally of all rallies, and then the debt will go away. That seems to be the plan. Let's hope that works out. Colin, appreciate that. I know, and you honestly deserve all the credit, my friend, because Colin is someone who doesn't just sort of tune in. Colin's someone who actually takes action. And that's the difference, right? It's people who actually take action. Now, if you want to actually take action and learn really what we do here and how we do it, you see that down below? Tomorrow, 10 a.m. New York time, I'm going to run a live webinar for you. I'm going to teach you what I buy, when I buy it, and when I sell it. It's 3 rules. I didn't make them up. No, I learned them from my mentors who've been doing this for 20, 30, 40, even 50 years on Wall Street in Chicago. And it's the way that Wall Street makes money. They use rules. They don't wake up in the morning and go, ooh, I guess what will be a wonderful stock today? Let's chase the latest thing, right? No, they don't do that. They don't scroll through, Twitter or something and hope to find a nugget. They actually have rules. And I use the same rules to find somewhere between 20 and 60 opportunities a week. And I do that on a Sunday. And it's just makes life so easy. You don't have to think about stuff anymore. You don't have to worry, oh, should I sell it here? Should I buy it there? Is it too late? Is it too early? None of those things happen anymore once you understand the rule framework. And I'll give that to you if you join me tomorrow. You need a little bit of patience. You need to understand the whole setup. You need to understand the mindset, the rules, the strategy. We'll run through a bunch of examples together to make it really, really high value for you. But you do need a little bit of patience. You'll need about an hour and a half, maybe even 2 hours to make sure I get to actually answer your questions. And if you just want to get rich by Friday and you don't actually want to learn, you just want to get stock tips, well, good luck to you. You're going to lose a lot of money, and then you're hopefully going to come back and you're going to actually learn the rules. And a lot of us seem to need to lose a lot of money before we're in a place where we're actually willing to learn. And I did the same thing. I wouldn't recommend it. So if you want to skip the pain and the waste of time and the years that you have to work extra and longer now in a job that you might not enjoy, then just come and join me tomorrow. felixprehn.org/webinar. It's completely free of charge. And here is a warning. Only the first 1,000 of you are going to be able to talk to me live in the chat. Why? It's the limit of the actual technology, not my rule. So therefore, be on time. That's what I would suggest. So felixprehn.org/webinar, grab yourself a seat. And if you're going to go and grab yourself a seat, put a W down there below in the chat so I see that you are joining us. Cut taxes before cutting spending. That always works. Exactly. It's a tried and tested process, isn't it? So, here's it. The European-US trade deal, that's actually a big one. It's a big trading partner for the US. It says, Goldman Sachs is saying, our baseline is that the status quo extends beyond the pause, possibly some small concessions before the US introduces new tariffs on critical goods. At that point, the EU is going to retaliate moderately to prevent a further response by the US, and things are going to be kind of stable here. I'm loving all the W's there, guys. Adrienne and Christina and Carolina and Scott and John and Victor and Elena and Steve and Brian and Fashad and everyone, guys, joining me tomorrow. We're going to have a lot of fun there. felixprehn.org/webinar. The link is also down below in the description if you haven't seen it yet. So a lot of stuff in here, but yeah, this is also an interesting one. They are continuing to be bullish on Microsoft, and people often think Microsoft is a boring company run by a guy who likes to be on islands with little girls, and that's fine. But no judgment, just a little bit of judgment, a lot of judgment. But it's an amazing business, right? And what I said about a year ago was that I think the real money on AI isn't in chips. The real money is in the software companies making products on top of those chips. And Microsoft seems to be the first one to actually pull that off. Well, them and Palantir. And Microsoft is trying to build the same thing as Palantir, by the way. It'll be rubbish, but they'll sell it faster because they're really good at that. So there's, continue to be very, very bullish on Microsoft here, which is an interesting one in itself. But let's move a little bit away from what Goldman Sachs is saying, have a look at some of our favorite stocks here and get a feel for where the market's heading. And the QQQ, the NASDAQ right now is trading at 516. That's down about 0.6% or so. That looks like it might be a little gap down here. And why does that matter? Because it's one thing that the algorithms pick up on. It's also something that every investor who understands what's going on out there is looking at. So gap downs are ugly. It's a very small gap down by the looks of it, but it's still not pretty. And a little bit of that's going to do with, there is a rumor out there spread by the most reliable news source in the world, the guys who just, your go-to for everybody who just wants pure facts, no politics. It's CNN. I'm joking, obviously. But they're saying that Israel is preparing to attack Iranian nuclear facilities. We don't know if that's true. But if it is true, we would expect oil prices to shoot up. We'd expect shipping companies to avoid the Middle East. They already are, let's face it. It wouldn't be a good thing. Certainly for oil prices, we get a bit of a spike there. Now, would it really have that big an impact? I mean, I'm not a fan of war. It's a horrible thing. For the people in the region, it'd be ugly. I've got some friends in that part of the world. I don't wish it upon them in any way, shape, or form. But guess what? What happens when oil prices go up? US oil companies can now drill for oil profitably again, because at $60, they're kind of a little bit screwed. At $70, $80, it gets a little bit more profitable for them. So I don't think that's going to have that big of an impact to you, to be honest with you. So if this does happen, and when big shocks happen or natural disasters happen or something, the weird side of us investors is, well, yes, we should think about how unpleasant it is. But you can also think, well, okay, say if the market drops a couple of percent on that news, ask yourself, is this going to affect big US tech companies, which is basically what drives the market? Is NVIDIA going to sell less chips? Is Microsoft going to sell less software subscriptions? Are people going to cancel their Netflix subscription? Or people going to Google things less? Or, click on stuff on Meta less? No, of course not, right? So if it doesn't actually affect the economy and the ability of these companies to make money, then that's the sort of dip that we might want to be buying. So that's what I'll be doing. So you got to start seeing the pullbacks in the markets as an opportunity. At least that's the way I look at it. So that's a QQQ. Let's have a look at some of the big tech boys out there. Let's start off with, if I may, and feel free to shout out some in the chat. Am I allowed to type? NVIDIA here. UNH. Okay, we'll have a look at that next for the popular request there. And actually, I've just recorded a quantum video. It's coming out straight after this one here, so make sure you guys are subscribed. And at NVIDIA, what are we looking at? We're looking at a slight dip, nothing significant. We're within yesterday's trading range, so this is just sideways action. And after you've had a recovery as big as this great, big, beautiful 40-odd% up, it is to be expected that we do a little bit of this. And that's okay. We just don't want to do that, right? That's the thing we want to avoid. So at the moment, this looks good. There is resistance at where? Can someone tell that? Tell me? Can someone see it? Where's the resistance sitting here on this chart in trade vision? You see the red line there? At $140. That's where the resistance sits, $140. So that's where institutions sell. A little bit below that, we obviously formed a little resistance there at 135, but not significant. But 140 is a big one because that's where the market makers sell. And that's also pretty much the high we had in, is that March? I think it was February. Now, volume is falling off. That's again something you see when we get into this pattern here. What do we call that pattern? Anybody? I call it an exhaustion pattern. And I think of Winston. I like hiking with him. He loves climbing mountains. He's very quick up. He gets a real kick out of going up. And then when he gets to the top, he just collapses and he lies down and he pants and he enjoys the view. And he's just like, let's just hang here for a bit. And I hope you brought some snacks. And that's basically what the stock market does. It goes up quite quickly, it consolidates in an exhaustion pattern. And then you have two options, which sounds silly, but you do. It is either going to break out or it's going to collapse. Now, if it collapses, it tends to go down faster than it goes up. And we wait for a signal up to the upside or downside before we do something about that. And I'll teach you those signals tomorrow if you join me at felixfriends.org/webinar. Link is down below in the description. First link down below in the description is where you find that. Now, stop loss at 128, says Scott. Is that where you have your stop? You're at the 150. Okay, makes some sense. Okay, UNH, I think, was the popular request there. And this is one of those things where I would say to you, don't buy it because it's cheap. Don't buy it because it's in the news. Forget the FOMO. Yes, it dropped a lot. It dropped what? 53%. And now you're thinking, well, what if it goes back up? It'll double. I'll make all my money, right? But that's just, well, why make it with that stock? Why make it with a stock that's being investigated by the US government for some sort of criminal activity? Why would you put the money that you've worked for many years into something that's being investigated by the US Department of Justice for criminal stuff? Like, just think about that. There are like more than 6,000 liquid stocks out there, and you're thinking about this one. For me, this is the one thing I wouldn't touch with like a 1,000-foot barge pole, because it's being investigated for criminal stuff. Like, let's just go somewhere else with it, please. I identified about 60 stocks on Sunday that look amazing, amazing. And they all look amazing based on what? On rules, on patterns, not the news, not the noise, not any of that. So stay the heck away from this. That would be my advice. It's dropping this morning. It's down 5%. It might go to $500. It might go to $100. I could not care less. Until this thing complies with our rules, I would not be touching this in any way, shape, or form. Okay, we got a couple of ACHR there. And I did buy some Archer on the pullback, which was as intended. It seems to be pulling back a little bit more, and that's also okay. So where is the sort of buy zone for me here? For me, it's basically, you see the recent two highs? You see here? That's a high. That was a high. That's sort of, for me, the zone of support. We drop significantly below that, we might find ourselves back at $9. But that's kind of, for me, the pullback zone. That's a little bit more risky, but generally speaking, we break out, we pull back, we continue on the way up. Doesn't have to happen that way, but that's usually how it works. So that's what I'm doing with Archer. Doesn't mean you should. What else we got in here? And Heather saying, I bought SMCI when they investigated them down to 17, back to 40. Heather, I'm very lucky, very glad you got lucky. But be honest, you got lucky. You didn't have insider information. It could have been that the accusations were right. It could have been that their accounts were a load of baloney, and you could be at $3 right now, right? So you got lucky. Luck doesn't disprove that it works. And our rules don't work 100% of the time, by the way. I want to be very clear on that. But they work often enough to make us a heck of a lot of money, at least for me. And everything else is just a coin toss. And I don't really like a coin toss. I like to actually have an edge. And why do we have an edge? Because, well, it's the same rules that everybody else looks at out there. By everybody else, I mean the institutional guys. So what we look for are opportunities where institutional money is buying something. Now, how do you know institutional money is buying? Well, look at the Archer chart. What happens? You basically get to your buy signal about here, and then look at the volume down there. How come volume is flat and then suddenly it explodes? Institutional money, right? That's the clue. And there are a lot of clues that we look at to make better decisions. But I'm still very happy to be lucky. Like, it's great to be lucky. It's amazing. It's just not really a repeatable strategy. And that's what we like to do. Soliber, when you stops half an ATR, yeah, look at, I think it depends a little bit on like how you set up, how big's the position size, what's your, what's your risk profile. I think you can come up with some rules, moving average lines, trend lines, that sort of thing. So I like to look for something on the chart that gives me support. That's like where I like to have my stop, not just some random percentage point. So do I sell my UNH? It's just either. It's a good question, my friend. And that's not what I'm going to answer, because it'd be illegal for me to answer that, because it'd be financial advice, and we don't do that. What I'd say to you is make sure that before you buy a stock, you know where to sell it for a profit and for a loss. And unless you know that, I recommend you don't buy stocks until you figure that out. And if you want to buy something in the meantime, buy the index, because that's going to go up in the long run. Individual stocks don't necessarily go up in the long run. A lot of them don't. So you got to figure that out. I'll teach you a heck of a lot of that tomorrow if you join me at felixprehn.com/webinar. There's a link down below in the description. Or go somewhere else and figure it out. But you got to figure that out. Like, if you're buying stuff and then you're hoping it's going to go up, and then at that moment you're going to have this epiphany that you'll know where to sell it, like, it's not going to work. And it's going to be stressful. It's going to be emotional, and it's just going to be not really the optimal outcome. Like, again, think about what do the guys do who do this professionally? What are the guys do who live off this and who work in big banks and funds? Do you think they're just like buy something and then say to their boss, I bought this stock. Why? Oh, it just felt good, really. I read about it on Twitter. And so where are you going to take profits? Well, I'll just see how I feel on the day. Or how about, well, it's down 5%. Are you going to sell it? Well, let me ask somebody. It's not how you make money. And if you think about that, like logically, it just doesn't make sense, right? The way we've been taught to invest is just gambling. And why is that encouraged? Well, the brokers like it if we're active, because that's how they make money. And the institutions also like to scare us, and they want us to fail, because that way we hand our money to them, to the ETFs and to the fund managers, and then they collect fees of our money. That's really the goal, I think. That's my personal opinion, is that they want us to fail, because the more you fail, the more people will give up and they just put their money into an ETF or something like that, and that way somebody else collects fees, right? And those fees really add up, and they're there for life. AMD's a sad story. Yes, indeed. Michelle, appreciate all the thumbs up there. I'm glad you were learning. Let's have a look. Any other questions? Any other popular stocks out there, my friends? We're looking at a market open in just 4 minutes. And pre-market, it looks sort of a little bit gloomy, but not, I mean, these are not big moves. They're like less than 1% moves on all the major stocks, really, except for Amazon, which is down 1.1%, AVGO down 1.2%. Just a little bit of a pullback, nothing particularly dramatic here. Scott's looking at DE, which is Deere & Co. Fundamentally, actually, a stock I like. Not that that necessarily matters. And why? Because actually they embraced automations and, sort of drone-like equipment very, very early on. And if you look at that, it's actually a beautiful setup there. I'm loving all the questions there in the chat, guys. So where was the original buy? Anybody? Well, got us a breakout up there, which is a little late, which is why people are sometimes better. Can you see where the 50-day moving average line starts to peak up? Where does it start to move up? Can someone see that sort of price point wise? Basically here, right? That was the low point for that. That was good, right? And that was a little bit of a pullback. And then we closed above the previous high there, maybe the day after. So that was probably a pretty good buy point again, that one there, that I'm pointing at. And then took out the previous highs here, right? There. We also took out that high here on the same day. So this looks pretty good. This looks very, very nice, right? What's the problem with it? Well, the only problem is that volume seems to be falling off a cliff. So we seem to have somewhat peaked prematurely, which is rarely a good thing. So a little bit of steam running out of that, down 0.6% today. It might just be another kind of healthy pullback and then it continues. I would probably wait for a little bit of a pullback, or I'd wait for volume to pick up on a green close. But ultimately, I mean, it still looks, again, draw some trend lines. That usually helps. So what's a trend line? Just connect the highs approximately. It doesn't have to be 100% accurate. At least 3 of them is kind of what you're going for. And you sort of get that sort of pattern here, right? So we want to kind of stay in that. And if we go sideways, we're going to go into a consolidation, into kind of an exhaustion pattern there. Scott, does that somewhat help, Scott? I think you already knew that answer, didn't you, Scott? But it's good, right? There's no resistance above. Like, we're at an all-time high, so it's a bullish setup, but it might just slow down a little bit. Not necessarily a terrible thing. It's maybe a little extended, which could be okay. Aiva, some of you guys in that. So this is a stock that I bought rather, down here at about 850. And it exited yesterday because my stop got triggered, which was, I believe, here. So how much money did we make on that? I actually thought it was 80%. Maybe it stopped a little higher. I can't remember. Maybe I moved it a little higher. I might have done. I thought it was 80%. I'll have to check. Anyway, somewhere between 60 and 80%. Now, some people are going to say, but it was at 116%. You should be terribly upset. In hindsight, I wasn't. I'm very, very happy to make money and to realize gains. And yeah, maybe it'll pop back up. Maybe it will. Maybe it won't. I'll wait for the right entry again. And in the meantime, I'm going to forget about AVA because I don't really care what stock I make my money with. You see, you don't need to make your money with one stock. You can make it with any stock. At the end of the road, it's money, and it's not going to care where it came from. Do you think Palantir will be the Microsoft of the future? Microsoft is one of the greatest sales companies in the world. Their product isn't the greatest. It never has been. It's always just been okay. But they managed mass adoption and get to a monopoly situation. Like this computer I'm using is run on Microsoft, right? Can't bloody avoid them. And they charge me for Office 365, which I actually don't use, once a year. And they don't even email me about it. They just don't. They don't even send an invoice or a receipt. That's how aggressive they are with selling. So they're very, very good at that. They're very good at making something that's okay. And then they have an insanely large number of corporate customers and private customers who will basically buy any old upgrade that they give us. And if you, I don't know, can you see my screen? Let me see it 1 second. Yeah, see that at the bottom here, that little search bar? That's Microsoft doing its weird AI thing, right? I didn't want it, but I've been too lazy to remove it. I'm sure you can somehow, but you know, they just put it there. And it's just, that's how aggressive they are. They're very, very good at that. So don't write off Microsoft, but Palantir undoubtedly will be, well, not undoubtedly, but in my opinion, it'll be used by people with more complex problems. And Microsoft might be used by people with more simple problems, right? Because not everybody's got problems that are that complicated. Office is better than it's ever been. I wouldn't know. I've not used Office for a couple of years, I'd say. I generally use Google Docs and Google spreadsheets because I can access them and I travel. I have them on my phone. I have them on my laptop. I can, you know, that's generally what I do. So I don't really use stuff that's saved locally. And I don't like OneDrive because I'm using Dropbox. And so I just, yeah, I'm not really in that world, but I'm still paying them, which is very silly of me. So I should do something about that. Do I get Trade Vision to be informed of breakouts? Yeah, it'll send you breakouts every day. It'll do that every single day for you. So we have in Trade Vision here, we have a breakout indicator that emails you every day, and it gives you a bunch of breakouts every day. And then obviously you still need to assess them and you still need to have your own risk management and so on. But it does give them to you. Like quantum stocks are starting to pop, which is why we bought a couple of them this week. And yeah, you know, caught pretty good breakouts there. For example, gold stocks had a good day yesterday. So yeah, it does give you those, but still, obviously, understanding what it's talking about and risk management and so on is what's actually going to make you a lot of money. So yeah, do check it out. There's a link down below. There's a trial to Trade Vision down below as well. George says, I personally use Trade Vision every day. Appreciate that, my friend. I'm glad you're liking that. How's your tennis game? Not the greatest, but I'll hopefully play on Friday when I'm back. Teams is a communication changer, is it? Well, I mean, again, Zoom came out with this great product, right? Then Google Meets came out and Teams came out, and they all do the same thing. But because everybody has Microsoft products already, everybody ends up using Teams. Not everybody, but a lot of people. So yeah, they just, you know, copy whatever other people come up with. How much is Trade Vision? How much is Trade Vision, guys? $19 a month, I think. I think that's what it is. Does the bell not travel? The bell does not travel, no. But yes, we are live. The market is now open, 4 minutes into it. Let's have a quick look at NASDAQ here, the QQQs, and we're looking all right. We're looking all right. So we've closed the sort of gap down here, most of it at least. We've come up a fair point, literally. If we look at SPY, same story there. We're pulling up a little, but there's still a bit of a gap there. So that's looking a little bit worse. Is that, let's have a look who that is. Is that Apple? Yeah, Apple is still a disaster. Below the 50-day moving average line, on the downward trend line yet again. Nvidia, which is now the, I think, largest company in the world, is it? By market cap, is also down 0.5 percentage point, but also improving a little, which is good. Go get Trade Vision, says Daniel. Check it out. It's risk-free. You just play with it for a week. If you like it, you like it. If you don't, you don't. And yeah, we did just release literally the dark pool trackers here, which means like any stock you want to look at, whatever you're interested in. You know, I don't know, say United Health. You're wondering whether institutions are bullish or bearish. Well, type it in here. Have a look. They're very bearish. 66% of positions are bearish and hardly anybody is bullish. And that tells you quite a bit, I would say. And then you can have a look at, can we? I'm not sure the sorting is working. Okay, I'll get that sorted. There we go. That's why it's good to test stuff. But yeah, so not looking particularly bullish there on that front. Trade Vision app is great too. I'm glad you're enjoying that too. As Scott says, we even take feature suggestions. We do, and we actually implement them. So if you go into, click on here in the top right, and then click on product roadmap, you see what we're working on. And literally, these are all your guys' suggestions. So you can just put in a suggestion via feedback, and then people will vote on it. And whatever is like the most popular, you can see the votes here, we will literally build that. So that's basically what it is. We're building this for you. We obviously have some ideas. Occasionally, we have a good one. But generally speaking, we want to build like just what you guys want. And that's really the feature thing there. And I actually have a call with my co-founder on that tomorrow. And we're going to, again, look at what everybody's asking for and rejig the pipeline and make sure we're focused on what you guys want. Well done, Joseph. Thanks. Bought Archer yesterday. So Tanila is making a sort of fingers crossed symbol. Please don't rely on crossed fingers, because that's sort of the sure way to really a tough time. And I want to make sure you guys do the opposite of that, which is use rules to make sure that you are in the right thing for the right reason, and you know where to sell it, you know where to exit it, and you actually have some stops set up, because I think that's the only reason you can actually make money in the long run. You can be lucky. Sometimes you can be lucky for years even. We've had a pretty nice market for the last couple of years, but ultimately it's how much money you make in the bad weeks. And that's how I always measure myself. I was like, it's a rubbish week for the market. How did I do? That's where I want to win, because that's my edge. That's where I outperform the index and everybody else. Do we have an API for data mining? Nope, not at present. Feel free to request it. I'm not against it, but we don't at the moment. Zim has a large volume spike. Okay, let me have a look. Zim, yeah, it does, but what do you see? What do you see? You see something that might trouble you. If you see something that might trouble you, please tell me about it. Lie down, rest on the couch, and tell me your troubles. What are your troubles with Zim stock in the last 3 days? There's a clue there. Put it in the chat, and I'll tell you what it is in just a second. How do you compress and the time frame? You can just scroll. You can scroll. You can also click on down here if you really must. You can also double click on the bars, and it'll also snap into wherever you're looking at. But yeah, there's a lot of ways of doing that. I generally use the mouse scroller. Okay, who wins the award for saying that the right answer first? Soliber and Spencer and Badger and Margaret and Lewis and many of you guys, which is amazing. And actually, there's some Günther there. That's also a good observation. But yeah, the main problem with Zim is that, you see that purple line there? That is the 150-day moving average line. Now, how do you know that? Because, well, in Trade Vision, you can set them up. You can set the colors, so you can play with them and you can give them whatever color you want, right? So mine is usually pink or sort of purple. So that's the 150-day moving average line. And generally speaking, we want to be above that. That's the 150-day MA. And what do you see? Well, we hit it and then we bounce off it. That's not good. That means it's now resistance. So we're on this downward trend. 50-day moving average line is still falling off. So the only kind of saving grace is that on the sell-off day here, where we bounced off for the second time, the volume was pretty small. So the buying was a lot bigger than the selling there. But yeah, it's not looking particularly marvelous. Yeah, I usually use a brown for the 200 or some sort of gray or something like that. You can obviously use your own colors. It doesn't really matter. They're just colors. Just try to keep them always the same. It makes it useful. Me. Under the MA, exactly. Dropping with low volume. Now, actually dropping with low volume is a good thing. Like, you want things to sell off with low volume. If you sell off with high volume, then it's going to fall really, really hard. So that's actually not necessarily a bad thing. But if you want to get a structured understanding of these rules, which might seem a little bit higgledy-piggledy, then come and join me tomorrow, like right after our live stream at 10 a.m. New York time. That is felixprehn.org/webinar. Grab yourself a seat. And if you're going to come and you want to learn because you actually want to get to freedom, you actually want to retire, you want to make your money work for you rather than you work for money, then put an F for freedom in the chat, and I'll see that you're joining me there tomorrow. And if I'm not live for the live YouTube stream tomorrow, then I'll still be on a plane, but I'll do my utmost to be there for the actual live webinar teaching. So put an F in there if you are going to join me and get some freedom there. Soliburp's going to join me, brilliant, my friend, and yeah, that's a great name. Daniel also, and Scott's going to join us, Graham's going to join us, George's going to join us, Cambrick's going to join us, Benji and Jose, and the F's are coming in a little bit too quick for me to read out. Jörg's going to join us, and everybody else too. Amazing. Happy Saltfish, that's a nice screen name there. Lisa says, joined the Goat Academy 3 months ago, best decision ever. Lisa, nothing makes me happier than people saying that. And I have a lot of people saying that every day. And that's why we do it. And that's why me and my mentors do it, because we see your progress. We see your happiness. And that's kind of the fulfilling thing. Because all the guys that help me and that I learned from, they're all retired. So they've all had banking careers. They had hedge fund careers. They had market maker careers. And they're sort of twiddling their thumbs somewhere on the beach or in the Highlands. And they're like, wouldn't it be nice to do something that was actually meaningful, that would actually help people, and repent for my sins as a former banker? And yeah, we all get a tremendous kick out of you guys winning. So that's really ultimately what it's all about. So come and learn more about that tomorrow at felixprehn.org/webinar. And okay, hymns. I'm seeing someone shout hymns. Let's have a quick look at that. I'll take a couple more. Also, smash the like button while you're at it. We have about a 15% approval ratio here, which is fairly dire. Hymns, what do you see? What was I saying earlier about, exhaustion patterns? It's just consolidating. Nothing wrong with it. Not going anywhere for the moment. You want a PPT slide of your trading rules, David? Come and join me tomorrow. felixprehn.org/webinar. NBIS. Oh yeah, we can have a look at that. That's an interesting one at the moment, which actually is on my list right now. Nibius Group. And yeah, that looks pretty good, right? That looks pretty good. So very nice run up here. Gapped up above the 150. Moving average lines are moving up. Look at the volume there after earnings. So that's a nice popper. It's taking out the $40 resistance. So the next resistance will be where? About 48, something like that. So it looks like it might have another nice run up there. Obviously, that's not financial advice. Graham is just writing aggressively 10 times. He just wants a summary of the last 44 minutes. Good luck to you. And I'm looking forward to seeing many of you guys tomorrow live at felixprehn.org/webinar at 10 a.m. New York time. So that's literally would be in 15 minutes from now tomorrow. And I will teach you the rules that help me make a lot of money from my money. And my goal is to get you away from looking for how do I find this? Great. I need a stock pick. I need one thing to buy. This is what people always ask me for. And instead be like, I now know what to do because I understand what is a buy. I understand when it is a buy, and I understand when to exit and how to automate that. So I never have to think about it, right? During the week, I don't buy anything. It's all done on a Sunday. It's all set up. It's all automated. It's all taken care of. And that's how we actually make money. So come and join me tomorrow at felixprehn.org/webinar, and I will be in a different location yet again. Somebody asked yesterday in the comments, why does Felix always feel the need to be in a different place every other day? I'm like, because it's bloody marvelous. It's traveling is wonderful. You meet a lot of people, meet a lot of friends in different places, and you get experiences and impressions and ideas, and that's kind of what life's about. So obviously it frustrates somebody. I know 99.9% of you guys are absolutely lovely, and we have the occasional loon out there, but it just shows like how far our mindset's been programmed by basically large corporations to kind of fit in and sit in a place and sit in a cubicle and work really hard till we are like 65, and then we are allowed a few years to sit in an armchair and die, right? I don't think that's what life should be about. I think we should all quit the corporate rat race. But to be able to do that, you need to have another income stream. And I think money can be that. I think money is a business in itself, but it needs managing. It's a skill like any other, like literally anything you do during the day, you've learned and people have taught you. If you play sports, people have probably taught you how to do that. And people spend hours and hours and hours practicing, how to throw a ball. But with money, we're like, oh, the latest thing is whatever, let's buy that. So I think if we want to have some self-respect for the time we put in to earn the money, that money deserves to be properly managed. And that sounds like a big role, but it actually isn't. All it is a couple of rules, setting up some automations, and spending maybe an hour or two a week on actually doing that. But if you think that you're probably working 40, 50, 60, 70, 80 hours a week on bringing in money, like it's a pretty small price to pay for a potentially much larger gain. So come and join us tomorrow at felixprehn.org/webinar. Learn how we do that.